Hello and welcome to M&A Advisor TV. We're here with Heather Madland. She's principal at Huron Capital. Thanks for joining us, Heather.
You bet. Thanks for having me.
Of course. Now, you were on one of our panels earlier today, but for those who hadn't had the chance to actually experience that, can you talk through some of the sectors that you're most focused on and why that is?
Sure. So we spent a lot of time on the panel this morning talking about the market dynamics and how competitive it is. We're a quasi-generalist firm, so the three sectors we focus on are specialty industrials, consumer products, and business services. But as I was telling the panel and the audience this morning, we've spent probably more than half of our time in terms of issuing proposals and with actionable deals around business services. And I think part of that is sort of maybe a looming recession out there and us being maybe a little more cautious about investing in companies with cyclical end markets. So we've had a lot of great success in business services because one of our fundamental investment models is buy and build. So you can find a tremendous amount of benefit from buying a business and then making tuck-in acquisitions. And so in business services specifically, one of the sectors that has been particularly active for us is facility services. So think about all the services that surround a building, commercial or industrial. And so for an example, one of the businesses we own is an HVAC retrofit and repair business. And so they're based in Arizona. So if you think about the types of services they offer, they are the number one provider of that service to the K through 12 education market in Arizona. So if an elementary school student is sitting in their kindergarten classroom and the air conditioning goes out when it's 120 degrees outside, you've got to go fix that. And so that creates a nice recurring service revenue component to the underlying business model, which is extremely attractive from both a margin and sort of a consistent profit perspective. And so we found that investment to be quite interesting in that regard. Across our three facility services businesses, we've made 9 add-on acquisitions in the last 3 years. So a tremendous amount of opportunity to buy businesses that expand our geography or expand the service or product set that we currently offer. And of course, those businesses are much smaller, and so the law of valuation means they might be a little bit less expensive than the platform acquisition, and so our ability to sort of average down the purchase price multiple through add-on acquisitions is extremely attractive.
And talk more about business services, because that's not usually a sector that I hear of interest. You mentioned, possibly this coming recession. Did you say that that is bringing more interest into this area because we think there's going to be one, or that's just an area of attractive returns?
No, I think it's attractive for a couple reasons. One, I think some of the services that we invest in are regulatory driven. So, for example, we own a fire detection and security systems services business, and so the government mandates that those alarms, the fire alarms in commercial buildings, get sort of inspected and replaced, and over time, and so that creates a nice recurring service model, which then can be insulated from a potential recession. Many of our businesses may have some like new construction component where we install the new system. But what we're finding is we can bring a tremendous amount of experience in terms of building the services side of that business and signing longer term contracts with larger customers to be that first call in case of an equipment failure, for example. So I just think we're being prudent in terms of where we can add value in this very competitive market environment, and we do that through our buy and build model, and that's been very successful for us.
Very successful. Well, and in terms of competition, because we know there are so many more people in this space now who are combing really for deals, and maybe not finding what they're interested in, but maybe they are. So where are you finding the strategies to help you be more competitive in this kind of environment?
That's a very good question. We spent some time talking about that today as well. I think there's a couple ways that we've addressed the market environment. One, about 2 years ago, we decided to become a multi-strategy firm. So instead of raising larger and larger funds, meaning buying larger and larger businesses, which, as we all know, it's more competitive the larger that you get, we decided to sort of remain focused on what we knew best, which is the lower middle market. So we launched what we're calling our flex equity strategy, which is focused on non-control and minority equity investing. And this is where we can be a little bit ownership agnostic for that business owner that is looking for a partner to accelerate growth, but isn't quite ready to sell. And so now we have the ability to own 20% of a company or 100% of the company through a multi-strategy approach in the lower middle market. So that's one of the ways. Another one of the ways, and we talked about it too, is where are proprietary deals these days? I mean, there's a lot of banked processes out there. It's sort of a necessary evil. You must participate. But I think one of the ways that we're finding proprietary deal flow is through our exec factor strategy, which is where we partner with the CEO ahead of buying a company. So we're looking at more of a thematic investing approach and underwriting a specific investment thesis with a focus on buy and build opportunities, where that CEO can be tremendously helpful in terms of finding the platform company and then working his or her network to find the add-on acquisitions as well. And so that's nearly 100% of the time we're engaging a buy-side firm to help us find those businesses, because the investment criteria is pretty narrow when you're focused thematically on a specific industry sector. And with their partnership, we can go out and sort of pre-fund an acquisition search, so to speak, in partnership with the CEO, and find that more on a proprietary basis than participating in a broad auction process.
Yeah, it sounds like you're almost deputizing those executives and really harnessing your relationship with them.
Indeed, indeed.
Well, and thinking about some of these bolt-on acquisitions and smaller kinds of things, I'd like to talk to you more about the broader picture for 2020. Do you think that there will be more deals in general, or are these kinds of deals, if you do think there will be more, would they be, say, smaller deals?
I don't necessarily think it's going to be a size different, like there will be a change in the size of transaction per se. I think there's two sides of talking about 2020. One side is sort of episodic. It's uncertainty around what will happen around election cycle, the political environment with tariffs, the interest rate environment, all of those things. We've been through cycles before. We kind of know that it's going to happen and what we do when it happens, and we're preparing our portfolio companies and looking at our investment strategies and the companies that we're underwriting to, with that in mind. Mm-hmm. Then there's sort of the longer term fundamental, change in the market environment, which is valuation. And, I don't believe that, the excess liquidity that the market currently has between, private equity firms, family offices, some esoteric capital providers, then also the debt markets. I don't necessarily see that evaporating overnight, even if we were to enter in some sort of downturn. And so I think the sustained level of excess dry powder in this environment will keep valuations elevated to a certain extent. I don't necessarily believe that we're going to kind of go back to the valuations that we had post-recession. And so I think private equity firms and anyone wanting to invest needs to have a strategy to deal with that on a longer term basis. And so I think, that's where we're looking at specific investment theses in sectors. That's why we're looking at buy and build opportunities. That's why we're doing the types of things that we're doing from a multi-strategy approach, for example, to combat that elevated valuation environment, because I do think it might be here to stay to a certain extent.
Yeah, so almost internalizing that and understanding that actually it's not going to go back to the old days. This may be something that is in the future. So think about strategies other than just a wait and see approach, but something else.
Right.
Yeah. Well, thanks so much for that insight, Heather. It's really appreciated.
You bet.
Thank you so much.
Mm-hmm.